Good morning, everyone, and welcome to Wiser Technology earnings call for the second quarter of 2025. My name is Lubomir Yankov, Wiser Investor Relations Director, and I will be your host today. Before we begin, I'd like to apologize for the rescheduling caused by last week Google's outage. And now, joining us on the call are Kosta Jordanov, Wiser CEO.
Good morning, and thank you for joining us today.
He'll cover a brief introduction of Wiser and a review of key business highlights from the quarter. Kliment Nachkov, our CFO.
Good morning.
He'll walk us through the second quarter financial results. Dr. Anton Gerunov, Wiser Vice President of Artificial Intelligence.
Good morning.
And Kristian Smilenov, Senior Vice President of Strategy and Business Development.
Good morning.
They will present for you the recently launched Wiser AI Factory. After that, today's call will conclude with closing remarks and a Q&A session. You're welcome to submit your questions in English via the Q&A feature in Google Meet or raise your hand to ask directly. And with that, let me now hand it over to Kosta.
Thank you, Lubo. I will start with a very brief introduction of Wiser for those of you who join us for the very first time. Wiser is an IT service company that designs and delivers mission-critical software for some of the largest organizations in the world. Our services span across software engineering, AI solutions, and digital transformation. And we deliver those services to enterprise clients across Europe, the US, and the Middle East. We serve industries that appreciate high quality and reliability and security of their software. So kind of the key industries that we serve are automotive, aerospace and defense, financial services, and technology, media, and telecom. Our team consists of about 550 top software engineers, scientists, IT consultants, that are based primarily out of Bulgaria and Serbia. The company is headquartered out of Bulgaria, and it's listed on the premium segment of the Bulgarian Stock Exchange under the ticker WISR. Jumping into the business highlights for the first half of the year. Number one, we continue to deliver fast revenue on an annual basis, which was fueled to a big extent by the acquisitions that we completed in the second half of last year. Just as a reminder, we completed 2 acquisitions right in the beginning of Q3 next year, and then the last acquisition that we did was in November last year, the Serbian company Badin. So now in our results this year, we see the combined impact of all of the legal entities that are part of Wiser after all of the acquisitions. The growth that we delivered for the first half of the year is 326%, which is an increase to about 18.4 million euros revenue for the first half of the year. This is a growth that is pretty unprecedented for an IT service company. And obviously a significant part of this was driven by the M&A activity. We are on track to deliver our revenues for the year as per the guidance provided of 38 million revenue, which represents, if we isolate the impact of M&A and look into only the organic growth, year over year, 38 million represent 15% organic growth for the year. If we look into H1, the majority of this growth is driven in the first quarter. This is not because we slowed down the business. It's because in Q2 last year, it was an outlier in terms of revenues. Before the deals, there was some one-off significant revenue impact in one of the companies. If we look at Q1, if we look at Q3, meaning July and August, we maintain over 20% year-over-year growth. In Q2, it's single digit. This kind of 326% growth for this year, and kind of this is something that we have been kind of maintaining for more than 2 years now. which puts us in the place to be the fastest growing IT company in Bulgaria for both last year as well as the last 3 years, according to Capital Ranking. So very, very high performance in terms of growth. Moving forward, we see strong project pipeline. So assuming no major unexpected challenges, we expect to deliver on our revenue target for the year. Throughout the first half of the year, we also continued our investments in growth so that we could sustain and potentially even in the future accelerate this growth. This includes investments in AI, and my colleagues Anton and Kristian will tell you more about that. Actually, the second half of the presentation today will be focused on what we do in the area of AI, how it affects our industry, what's Wiser's positioning. I feel that there is a really interesting opportunity for an IT services champion to emerge in Europe. And I think we have a good chance, a good shot at being this company, or at least one of the companies that emerge as champions. Part of this is also as kind of continued investment in growth. We also developed our own AI platform, which we call Wiser AI Factory, and announced it about a month ago. It's a way for us to very quickly deliver proof of concept projects to our customers so that this could help us win more projects, but also in a very kind of enterprise scale in terms of reliability, in terms of security, deliver scalable AI solutions. And again, my colleagues will tell you more about that. Overall, we see the potential for, assuming we execute well on this strategy, to accelerate growth, to essentially unlock growth that is quite unprecedented for a service company. And I'm talking about organic growth, because we see the lines between product and services companies blurring a little bit, driven by the vast acceleration in productivity that AI already delivers and will continue to deliver in the coming future, even to a larger extent. In terms of growth investments, we also set up our legal entity in Germany, which was registered within the first half of the year. We did a major restructuring of our go-to-market strategy and essentially increased the team and the focus when it comes to business development. So we restructured our go-to-market to 5+1 business units. The 5 business units are automotive, aerospace and defense, financial services, telecom, media technology, Middle East, and emerging verticals. So as you could see, these are kind of more focused to specific segments of the markets that we serve. This approach allows us to build much kind of deeper understanding and connections and relationships and positioning in each of the segments that we serve with dedicated teams. So essentially the P&L now is split amongst those 5 business units. And the kind of 38 million is distributed between the 5. So we have 5 quite independent units that are running the 5, kind of leading the 5 areas where we see growth and where we have focus as a business. The 5th unit is partnerships. So we have a 5th unit which does not own a P&L, but is responsible for building, maintaining all of our strategic relationships from the major IT companies to a lot of partners that we do joint projects with. Also, in the first half of this year, although 2025 for us is focused on integration, kind of sustaining growth, building this kind of baseline for growth, doing those investments in AI, and fully integrating all of the previous standalone companies into one single Wiser company. Despite this, we did start to look for some opportunities that will fuel our 2026 growth through M&A, in addition to kind of the organic growth. Speaking about the kind of the integration process, Maybe a quick update. We already merged legally 3 of the companies into Wiser Technology Solutions. We have 2 more to merge. Objective is till the end of the year, beginning of next year. This simplifies a lot the administration, and helps us decrease the overhead as we continue to simplify the whole structure of the group. We did sign definitive agreements for the acquisition of the remaining 49% of one of our subsidiaries, Prime Holding. All of the other entities are fully owned by Wiser. So with the completion of this deal, which is expected to be completed in November, Wiser will own 100% of all of its subsidiaries, which will then allow us to legally merge the remaining companies, including Prime Holding and Digital Lights. Huge effort for us, and very important for our efficiency moving forward, is the integration and the rollout of unified systems. As you could imagine, each of the 8 companies came with their own standalone way of how they do things, and it's very critical that we unify this. And we did a lot of efforts in terms of processes, in terms of organizational structure. Now we get to the point where we need to put common systems in place. We selected an ERP solution, which is already in the process of integration, and that's Microsoft Dynamics, which will cover not only financials, but also how we do project management, project reporting. Essentially, we'll unify the way we work as a company. And we also picked, and it's in process of implementation too, one of the best HR management systems in the world, which is SAP SuccessFactors, to be our systems where we manage our talent, the biggest asset that a company has, from hiring to retiring. Both of those systems, especially Microsoft Dynamics, is scheduled to be launched, the first 2 modules, in January 26. SAP SuccessFactors is already in the process of being rolled out module by module. In terms of margins, we do see some improvement year over year, from -5.3 in terms of EBITDA margin to -0.4 for the first half of this year. Also some improvement in the net profit margins. Most of the post-merger optimizations were initiated in essentially at the end of the first half of the year. The reason for this, and this was the plan to announce last year, is to give the organization a year and focus more on making sure we don't lose any key talent, we don't lose any key clients, and I'm happy to report that both of those are fact and were achieved. And now it's time for us to make the organization more efficient, and we started with some of the initiatives towards the end of the first half of the year. We do expect to miss our guidance of 6% 2025 EBITDA margin, but we do expect to deliver 5% in the second half of the year. There are several reasons. One external one is the change in the US dollar depreciation, which, given that US dollar is a third of our revenue, so it's actually continues to increase, that directly resulted in 5% negative impact on our EBITDA. Second one was the integration time, and the fact that it does take some time to integrate those companies so that we could actually start optimizing the processes and start optimizing the overhead. And number 2, it's the AI investments that we do. One note here is that we have not capitalized any of those investments. So all of the time and money and effort that has went into developing the Wiser AI Factory went through the P&L and is reported in those margins. And we feel that this is an effort that we will continue, and this is an effort that we already see actually bringing a positive return on the investments that we do there. And again, my colleagues will tell you more in a second. Also, we did change the KPIs and the incentive programs in the company. So starting H2, the whole team is now focused on driving margins, not just revenue. This was a new program that was approved by the board a month and a half ago, and is now being rolled out. So this also kind of marks the shift for the whole company from from driving pure growth, which I believe we did pretty well, to actually starting to focus more and more on the bottom line, and starting to focus more and more on efficiency as well. In terms of corporate development, there is an upcoming capital increase with up to 4.6 million shares. This is the kind of the maximum. So if all of them are subscribed, this will result in a dilution of about 22%. The capital raise will be at 6 leva per share, and we already have more than 60% of the shares committed. So we do expect to see a successful capital increase. Also, a month ago, we announced that we're happy to announce that 2 large institutional investors joined us as investors in Wiser, acquiring through the secondary market about 7.2% of the company. The only reason we have not yet announced the names is because they asked us to first to kind of do their reports before we announce this. But kind of very soon we'll announce the names of those 2 institutional investors. With them, we already have a very, very solid baseline of investors that could support our future growth and plans. And with that, I'd like to hand it over to our CFO, Klimo.
Hello, guys, and thank you for being with us today. A little more details on the financials from me. Growth, as we mentioned, more than 300%, fueled by the M&As in the second half of last year. Now, if we assume that all the companies from the group were together throughout the entire 2024, we still have a decent growth of 12% organically. And as you can see, the overall growth that we're reporting this year is quite significant compared to the previous year's H1 results. EBITDA slightly negative. It's usually the first half of the year, and especially the second quarter, is quite slow for the industry. It's not unheard of in the IT service industry. And in addition, we have some one-off expenses related to the integration and optimizations. A little more details on the P&L. Kosta mentioned that a third of our revenues is in US dollars, especially coming from clients from the Middle East. So the depreciation of the dollar affected us negatively. Then we also have significantly higher growth of remuneration and external services. This is due to the fact that we are now trying to cater larger clients, enterprise-grade clients, and they require to penetrate them. They require quick staffing, which requires higher direct cost pressure on the margins. We also, again, all the investments that we're doing go directly to the P&L, and these are related to the AI factory that our colleagues will talk a little bit more. And also the investment in common processes and systems that will unite Wiser and make it more effective. Significant increase of financial expenses, again, due to the depreciation of the US dollar and the revaluation of the receivables on the balance sheet.
Klimo, sorry to interrupt, just to jump in with one minor comment. If you look at the change of costs for delivery, that's essentially the remuneration and the external services. Most of the external services are related to hiring external software engineers. So the combined growth of this cost, which is our costs of goods sold, is significantly lower than the growth in the revenue. So we're still on a good trajectory. It's like 291% versus 326%.
Yeah. Thank you, Kosta. Revenue-wise, breakdown of revenues by industry. Not a lot of changes compared to what we reported last year. Technology, media, and telecommunications is where the bulk of our revenue comes from, with 58%. Then we have financial services, 17%, emerging verticals, 13%, and automotive, aerospace, and defense with 12%. Revenue by geography, the Middle East is now 25%, significant increase, and the trend is expected to continue. H1 last year, pro forma consolidated basis revenues from the Middle East were less than 15%, between 10 and 15%. North America is still a significant market for us. Then we have EU excluding Bulgaria 22%, Bulgaria 13%, and Europe non-EU, mostly Switzerland and UK 8%. In terms of currency, as we mentioned more than once, 33% of our revenue is in US dollars. Euro is 46%, still the largest chunk. And we have 16% in BG in Bulgarian lev and 5% in Serbian dinars. Our balance sheet highlights, notably the receivables are increasing. Again, this is due to the enterprise clients that we are trying to service more and more, and which consists most of our pipeline and new projects. And they usually work with longer payment terms. And the trend is probably expected to continue. We also have some fixed price projects which will be completed before the year end and will improve our receivables and cash position. The investment in Triware, unfortunately, it's not where we would like it to be for reasons external to the company, but hopefully things will improve. These are pretty much the highlights of our financial performance in H1. In terms of, again, upcoming corporate events, the capital increase launches actually today in September, and this will complete the phase 2 of the acquisition of Prime Holding. The 49% remaining will be acquired through this capital increase. We also will publish the Q3 results in November, on November 28th, and we'll have the next earnings call on December 4th. With that, I would like to give the floor to our colleagues, Tony, VP of Artificial Intelligence, and Chris, SVP of Strategy and Business Development, and they will talk a little more about our key initiative of artificial intelligence adoption.
Thank you so much. Indeed. So again, thanks all for joining us. Essentially, when we think about AI, we should be thinking in two major directions, and so we are thinking here at Wiser. The first direction is how AI, all the artificial intelligence tooling, is a game changer internally. That is, for us, what can we do to actually level up, to be on top of our game in terms of AI? What sort of tooling, approaches, methodologies, and actually ways of working we can adopt so that we can improve the efficiency of our delivery, we can improve the timelines, we can improve the budgets and pricing of our projects, and of course, ultimately improve our EBITDA and net profitability. So that's one of the probably biggest topics that we have internally in the organization. The other topic is obviously we are not merely a service provider. I would rather say we are a trusted consultant. We are a trusted advisor for our customers. And they come to us asking us the same question. How can we introduce AI? How can we have a bunch of efficient use cases? How we can streamline our business operations, optimize what we have, streamline our productivity, and really get the business benefit out of the hype, right? So essentially, that's the other big topic that we deal here with artificial intelligence. And maybe it would be useful to actually separate them and say a few words about each. I would like to focus a bit more on the AI adoption. That is what we do internally, what we achieve, and what our approach and our results are. And then Chris will maybe share a bit on how we have packaged all of this internal knowledge combined with state-of-the-art technology, combined with our business understanding, so that we have a productized services platform, which we can use to very rapidly do AI enablement for our customers. So the internal perspective and then the external perspective of how AI is a game changer for us. In terms of our internal perspective, we like to think of what a traditional services business is and what the new AI-enabled business is. And then traditionally, I would say our superpower was developing stuff, essentially coding. right? If we think about the 5 major steps in delivering such a solution, we say, okay, we make a concept, we do the design, then we do the development or the actual coding, the actual programming, then we do the testing, then we do the release. And what we used to sell and what our competitive advantage was really the prototyping and developing the thing, right? Essentially, we get more people who do more code, therefore we get more revenue, therefore we get more profit. And that was the traditional way of thinking. Traditionally, business sense was relegated to product management, business analysts, scrum masters, product and project managers, and then engineers would focus on technical level tasks, right? Partnering with business people to deliver. And then industry expertise, you tend to build it over projects at different levels, right? This is no longer the case. As you might have heard, AI is good and is actually getting better, essentially at what used to be our superpower, prototyping and developing stuff. In terms of being able to provide very rapid prototypes, things like Lovable and Replit and V0 and so on and so forth, right? And then the big question is, what's left for us to do, right? How we can add ever more value to our customers, make ourselves ever more valuable, right? And then have a business model that makes sense both internally and to the market. And if we think how things essentially change in this picture is, well, what customers now care is that we meet their requirements with what we propose. It's that simple. If initially we had to focus on coding something and then going through iterations and getting a lot of feedback, the market has now shifted. Clients say, guys, those are the requirements. Provide something rapidly. We want to see it. We want to touch it. We want to feel it, right? We want to start clicking in it, right? In a way that was never possible before. And in addition to that, we want this to be cheaper because it's now AI enabled, and we want this to be much faster. So from a business perspective, I would say AI brings us 3 major trends. Trend number 1, people increasingly care less about technology, more about the validation between requirements and the UAT, user acceptance testing. They care about getting business value. I mean, it's not like we need a Java team. No, it's like we have 10 use cases and we want them done. Second thing, this has led to the compression of timelines. Projects that used to be initially longer now tend to be shorter, right? Where we used to see 12 to 18 months, people say, well, with AI, you should be able to do it 6 to 9, right? And then the final thing, it's not clear if every single market participant has the complete full understanding of what's the actual impact of AI. But everybody understands that it must actually bring productivity gains. And if we're a service company, our customers would say, well, this means the same thing should be cheaper, right? So there seems to be a bit of downward pressure on overall project budgets. And then the question is, okay, if we know that this is the market reality, right? And I think at Wiser, we have a pretty good grasp of the market reality here, right? What can we do so that we can grow our business at a profitable rate? And what we can do is to completely rethink how our people, our teams, our projects look like, right? We now need to focus a bit less on the superpower of prototyping and development and focus much more on requirements gathering, on getting business sense, on really delivering the product to the user acceptance phase, where people say that makes a lot of sense. It's great. Guys, we like you, right? You had 1 POC with us, but we have 20 ideas. Because, you know, all these trends in the market, that stuff is now focused on business, it's shorter, and it must be cheaper, does not mean that there is less business in the market, right? And that's the big change. It doesn't mean there is less business. Initially, people would say, I have 1 big monolith project, right? And you'll do it for 1 year, for 2 years. Now people come to us saying, guys, we have 20 ideas on how to implement AI, right? So the volume of business is not decreasing, right? The cost, the total revenue that's out there in a customer, the customer lifetime revenue, I would say it's not decreasing. what we are seeing is a restructuring of this, restructuring from single monolith systems that we do it over and over again for months, sometimes years, into very rapid POCs, which are 10 POCs, 20 POCs, 30 POCs, of which 5 are successful, or 10 are successful. And those are now rapidly built into scalable, enterprise-grade, production-ready systems. Right? So this restructuring also calls for our internal restructuring, meaning that, well, we now business sense is relegated to product management, but not only to product management, right? Now engineers need to be able to understand the client requirements and can rapidly prototype using no-code tools. Now we are moving towards higher level tasks of the software development. We work much more on architecture, much more on code verification. And essentially, over the past year, all our guys, all our teams have been leveling up. We have this sort of internal joke saying, okay, generated code can do 70% of the work, but you need an exceptionally good engineer to tell which 70% this is and to do the other 30%. And this is where we position ourselves. That's our new competitive advantage, right? We are AI enabled, we can rapidly prototype, but we can also build enterprise ready production scale types of systems, right? You don't get that with the quick prototyping tools. We hear a lot of guys doing stuff with Lovable and Replit, and the more technical amongst them do stuff with Windsurf and Cursor and so on and so forth. Keep in mind also just quick prototypes, right? They cannot be useful in an enterprise setting. What we can do is we do all of that. We do all of what the hype guys on LinkedIn do, right? In addition to getting a lot of business understanding so that we can really make the impact, we can really move the needle, in addition to building the true actual system that we can push in an organization of 20,000 people with 15 billion in assets, right? That's the scale we provide. And that's our unique value proposition. That guys with just an AI-enabled app, just can't do that, right? And that's how we change our organization internally. That's how we change our people internally, which enable us to provide a very different service in a very different business model. And then when we think about integrating AI into delivery, I'll just go briefly through the main stuff. If there are any questions, we'll be happy to answer them in the Q&A part. But essentially, we fight on all fronts, right? We recruit for key skills, looking to get people who have all the basics that need to complement what AI gives you, including algorithmic thinking, problem decomposition, modularization of systems, code review, security, enterprise-grade architecture, best practices in coding, and so on and so forth, right? All the stuff AI can't give you. We enable the use, and every single engineer in the company is trained on how to use AI tools. We fit tools for the different roles of projects, essentially saying, we don't have one tool, right? We're not the lovable kinds of guys, right? Not that we're not lovable, but we have 10 to 15 different tools, right? And each of them is used where it brings most productivity. This scope of knowledge, this scope of understanding of the whole landscape of AI tooling and how it enables productivity is not what most companies have, right? They have 2, 3, 4 tools. They have a good, I would say, decent understanding, but they just don't have this sort of broad overview across the whole landscape so that they can pick the best tool for this project and then get the best results out of that. We heavily use AI tooling in delivery, right? And when I say we heavily use that, I mean the modern tool set, GitHub Copilot, GPT-5, and obviously 4, right? You can't use 5 without using 4, Cursor, Cloud Code, etc. Really, the modern stack. And finally, synergizing AI capabilities, advancing our AI expertise so that we move from pure time and materials type of projects towards value-based estimations, towards trusted advisory, towards enabling our customers to really do a lot of projects in a long-term AI transformation program. And that's where we push hardest, I would say. And in terms of what we have achieved, this has actually been quite an ongoing initiative. I would say before it was cool, right? In the organizations that formed Wiser, even before integration, there was a lot of AI-enabled stuff. But as we formed Wiser, right? Wiser is essentially an AI native company. From day one, we started thinking on how we can use those tools and how we can enable our customers to get more out of what we deliver. We've always had an extremely strong leadership mandate for AI project integration, including 100% AI-generated unit testing. In terms of development, people don't like to write unit tests. Let AI do it in 100% of the cases. We had the leadership mandate to have 100% of all fixed-price projects delivered by AI. Internally, we have an AI Center of Excellence, mobilizing all the expertise, all the knowledge, synergizing, supporting. Whenever somebody needs help with AI, the Center of Excellence can do that. This would include tooling, this would include intensive trainings, this would include even SWOT support as needed. I would say our AI transformation journey is pretty mature. For quite some time, we have success metrics defined across all the AI integration pillars, all the way from tool provisioning, to tool activation, through tool usage, through capitalization of the tool in actual projects, including number of AI-enabled projects, including timelines, including delivery, including AI productivity multipliers. So we have defined this, we track this continuously. The board is informed, I would say, monthly on the progress of this, and everybody in the organization, all the way from me, I would say, is leading the AI team, all the way to every single colleague involved in delivery, every single colleague involved in sales. And I would say pretty much every engineer are actually looking to push this agenda forward. And this agenda is now actually quite progressed with us. A majority of Wiser projects are now AI enabled, right? Obviously, I'm not sure we'll be able to reach 100% for regulatory reasons. Sometimes customers say no AI. Sometimes there are contractual obligations. Sometimes there are security concerns. But we are very much on track to reach above 90% by the end of this year. So if we have 90%, this would mean that in virtually every project, we use AI to gain productivity. And that's how we think about the internal transformation. And obviously, this begs the question, if we're so advanced internally, how can we get this knowledge, then glean the productivity, package it in a nice form, and then provide this also externally to our customers? And I would say that would be the initiative which is called the Wiser AI Factory. And Chris, if you don't mind me, I would give the floor to you if you'd like to present from the business perspective. And of course, if there are any questions about the technological implementation, about the market landscape or anything of the sort, both me and Chris will be able and happy to respond to this in the Q&A. But Chris, take it away.
So to understand why we created the Wiser AI Factory, I think it makes sense to go very quickly over the history and to see how Gen AI was developed and what was the market impact of the Gen AI technology, so that we understand how business demand changed. And Tony, to some extent, covered that, but just reflecting on from the client requirements and the projects that we were executing the last couple of years. So in 2020, we saw the GPT-3, which was announced, and it had remarkable learning capabilities, right? But there were some problems with hallucination. So it wasn't that much production-ready system. In 2022, we got the first conversational model, ChatGPT. And back in the days, we started seeing companies that could move very quickly, usually startups and scale-ups, to want to leverage this technology to get competitive advantage over their competitors. And we started integrating a lot of Gen AI into different SaaS products. Example of this construction, AP, account payables, invoice processing product that we built in late 2022. And this product actually scaled, and it's servicing enterprise clients in Canada. But back in the days, this was used for quick go-to-market and for business leverage, but it wasn't yet ready to go full scale in production deployments. 2023 and 2024, we started seeing the technology maturing even more. We started having multimodal models and ability to get text, image, and audio processing into different products that we were building. So last year, though it actually feels like a couple of years ago, we were working on a couple of enterprise POCs, proof of concepts, and we had a mandate from leadership in these companies to understand how can GenAI be integrated into their process, into their tech stack, and how can they actually get a value. So every leader last year had to have a position on the LLM integrations and on the GenAI strategy. So last April, I think, we started engaging and working on the AI board advisor, V1. So we built a system, a rack system that actually allowed board members to query via conversational manner, to query information about the company. Think of this as having, let's say, 50 annual reports, and the board members asking, how is the company doing? How is the market? What are my numbers, my KPIs? However, the technology back then wasn't that mature, so we had some issues, right? Especially with numbers and large files. And there was a race in the LLMs and the foundational models. So when OpenAI released ChatGPT, everybody was caught by surprise. And during 2024, all the big guys started training their own models, and the race was on. Access to infrastructure was a bit tricky. Microsoft was back then leading this with NVIDIA. Inferencing platforms were starting to form up, and fine-tuning was a thing. So in August last year, we were also working on a fine-tuning platform. Now, what was more interesting is in late 2024, we started getting agentic AI frameworks. And this changed the way that we were building enterprise AI systems, even on the POC stage. So now we could actually automate specific process, and autonomous agents could be a lot more efficient and could automate specific tasks, and they could actually introduce a lot of efficiency. And by this time, September and December, we were already working on 2 other enterprise AI projects, which were now agentic, the investment AI and the procurement AI products, which we are still working on. And in 2025, something even more interesting happened. So China got in the game. They released DeepSeek R1, which was basically at par with the paid and closed source GPT. And they also introduced different approach to training models. And now there was even focus on smaller distilled models, which were cheaper to use in production. It's important to know that any enterprise AI system that uses LLMs uses tokens, and there is cost associated to every process and every usage of this system. So when you type something in the system, basically there are tokens that are being spent. So we need to very closely monitor the cost of GenAI systems and how they're being used. At this point of time, earlier this year, AI adoption started increasing, but enterprises still struggle to scale. So there were a lot of ideas about different AI use cases. To a large extent, people didn't really make a difference between standard machine learning AI and GenAI. So there's leaders needed to have consultants that they could trust to help them through their AI journey. At this point of time, and as Tony said, early stage SaaS product development came under heavy scrutiny. So all business leaders were expecting that with smaller budgets, they could implement quickly proof of concepts or prototypes, right? So we started moving more and more towards AI consulting and working side by side with agencies like PwC, Deloitte, Bain, to help enterprises understand and prioritize different AI use cases. What is the business value of the specific use case? How do you rank it? How do you make sure that it's usable? What would be the cost, the ROI? And more importantly, is there a technical fit? Does it make sense to invest in implementing specific AI or Gen AI use case, right? Do I have the data readiness? And in a nutshell, implementing Gen AI use cases sits on top of digital transformations and digital evolution. So we need to have the processes, the data maturity, and the data strategy. And only on top of that, we can implement the right AI use cases so that we have ROI. After delivering, I think 4 or 5 enterprise projects, we actually saw that there is a huge gap between implementing a POC and actually getting a system in production, enterprise system in production that is secure, scalable, that meets all the data sovereignty requirements and compliance requirements of enterprises. So going through this a couple of times, we actually thought that it makes sense to create a product that helps us accelerate the adoption and realization of value from AI solutions, and to help our enterprise clients implement quickly AI POCs, but after that, not to throw away whatever is designed, but actually to move to the next stage and implement MVPs in under 3 months in production. During this time, we also observed that the way that people use AI systems and AI platforms is changing. It's not just a chatbot anymore, right? That you get some text out of it. It's a full system that is AI enabled. And yes, underneath, you still have the infrastructure, the chips, the LLMs, the clouds. You still have the data strategy, the data sources in the enterprise organization, because it needs to be customized. And we need to integrate the AI solution in the enterprise text landscape. We do have the tools, all the different connectivity, and now we have the agents, because of the de facto standard to do agentic systems at the moment. All agents can optimize different business processes. But what we haven't seen is how people started interacting with these systems, and the AI experience layer, as we call it, is now different. So how do we provide the same user experience on enterprise level? How do we ensure that people interacting with Gen AI systems continue to get the best experience out of it, as if it is aligned with the overall design system of the enterprise, right? But still communicating through a conversational manner. So we created this concept we call generative UI, and you can think of it as the follows. So you have a business process. In this case, it's a ticketing journey. But now, instead of people going on 10 different pages, clicking here and there, what is the right, when can I get this right, when can I book, and after that to buy it, all of this can be reduced, let's say by 50%. The whole journey can be reduced, and people can still consume the information that they need in the best possible manner, having the best user experience through the chatbot and the platform. So this actually real screenshots from a project we're working on in Saudi, one of the mega projects there, and we have optimized the ticketing journey. And the way that it works is we are providing React components dynamically in the chatbots, depending on the business flows that we are implementing. So in this case, give me a tickets, you see all the possible tickets. When can I book these tickets? You see the calendar, then the ticket basket carousel, and you can also chat to a live agent. So this allows us to track how people interact with Gen AI systems. It helps us get hyper-personalized experience, and in the end, to increase the conversion in the specific business flows. Now, what is powering this generative UI concept, and actually what helps us deploy enterprise-level, secure and scalable solutions, is our Wiser AI Factory, which in a nutshell is an agentic AI platform. It allows us to connect both structured and unstructured data from different enterprises. We have out-of-the-box agentic RAG pipelines. We are leveraging the latest version of Microsoft AutoGen Studio to have different agents as use cases to connect to different tools, including MCP servers. And what is interesting here is that we also have BI layer, which is dynamic dashboards, and we allow our users of the system to ask via the assistant, the chatbots, different visualization questions. Let's say, how is my pipeline performing, or what is X and Y performing during the last couple of months, etc. And they can pin the charts that are provided by the charts agents in the dynamic dashboards. The platform is cloud native. It is LLM agnostic. So in one case, we deployed this in Azure using OCR, using services, using, of course, OpenAI. In other cases, we deploy this in GCP or in Grok, which is an inferencing platform for Saudi. So it is a framework and a platform that allows us to implement custom enterprise AI solutions for our partners. Why is this important? Because it helps us close the market gap in AI ROI. 71% of companies using GenAI do not know how to scale beyond POCs. Implementing a couple of POCs is very different than doing a POC and then directly investing in an MVP in a production-grade, scalable enterprise environment. Less than 1 in 4 organizations are actually redesigning how they interact with GenAI. And our platform allows us to redesign different processes to help our clients actually unlock the full GenAI potential. The factory provides strategic clarity, rapid execution, and measurable outcomes. We have deployed this in 5 enterprise clients already, and a lot of the pipeline actually in Wiser is filled by that. And why is this important? Because now we have shorter enterprise sales cycles. We can go with new clients and we can directly show them demos. We can show them how the platform works. We can show them different AI projects implemented on top of this platform. And at the same time, we can defend that it is secure and it is scalable, and we can pass all types of technical due diligence and security requirements. We do quick POC value demonstration, and we have enterprise-grade adoption at low risk, and we are scalable from day one. And in terms of numbers, now AI POC enterprise level, it costs around 50K, let's say, and under 1 month. MVP, it used to be 6 to 9 months, now it's 3 months and 500K. And we have all the tooling and know-how to do enterprise AI strategy and transformation, and we price this between $1 and $2 million. So Kosta, back to you.
Thank you, Chris and Tony. I hope this was a helpful overview for everyone of what we do in the AI space. We've got a lot of questions from many of our investors, including around the announcement of AI Factory, and wanted to give you a little bit more look under the hood and kind of tell a little bit more of what exactly that is and how we see it supporting our business moving forward. With that, Lubo, I suggest we move on to the Q&A section.
Yes. Thank you all for the detailed overview. Now we'll move on to our Q&A session and waiting for your questions.
Yes, Georgi?
So, hi, I think that I might actually hijack the Q&A session, but still, I have a couple of questions. First is regarding the revenue growth. Which verticals and which geographies are currently outperforming and which are underperforming compared to the 12% year-on-year increase that is like for like?
So in terms of geographies, kind of the faster growth that we see is in the Middle East. And actually some of the projects that we shared with you are in that part of the world. In terms of industries, we see pretty good growth across all of them, other than automotive is a little bit slower. That said, I'm happy to share that we did sign direct deals with two of the major manufacturers of automotives, which is something new for us. Most of the business we've done so far was through partners. Now we have our first two direct contracts with major manufacturers. So we do see an opportunity for this to pick up most likely in next year.
Okay, so another question related would be the defense portfolio. What is you've had a lot of deals coming in recently. Currently, it contains 15 projects, but could you share some more color? What is the size in terms of expected revenue and the timeline there, and how do you see this going on further? Apparently, it's a big thematic hype in the investment community, but what do the numbers say?
Yes. So in Q2, we announced two additional projects under the European Defence Fund. The active ones are less than 15, so this includes the 15 includes also some projects that we completed, but we have something like 7 or 8 active projects, if I'm not wrong. Those projects are typically like 3 to 4 years time horizon, so relatively long. And the revenue is more or less linearly spread across this period of time. So the good thing is that this gives us kind of long-term stability and predictability, these type of projects. One of the big objectives that we have moving forward is to also transform those kind of projects in collaboration with other major European players to work on European Defence Fund projects, to transfer some of those to direct relationships, kind of with those leaders. We do have some very, very interesting and active ongoing discussions there. Another thing I could share is that a lot of the major IT service companies in Western Europe are now interested to get more into this space. And we are a very suitable partner for them with all of the experience, references, access to kind of certifications and everything else. So we are starting to bid also for projects, not on a European level, like, for example, now with the partner in Germany, we are bidding for a project for the German ministry. So in terms of numbers, what to expect today, automotive, aerospace, and defense generates about 12% of our revenue. I expect this to increase throughout 2026.
So 26, that will be together with the automotive, right?
Yes. We've bundled actually those in terms, even if you look at the structure of the business units, automotive, aerospace, and defense is in one business unit. The reason is, and this is not unusual, but for us, the reason is, number one, the approach to technology and market is pretty similar. And number two, almost everything we've done so far in automotive is for the top 3 German manufacturers. And we do see that kind of there is a big trend for those manufacturing capabilities to be now reused for defense purposes. So essentially, the same partners are now involved in defense projects, and we wanted to make sure we fully kind of take advantage of this trend by having one and the same team focused on all those 3. And in the third one, which is space, also very close to how defense projects are being managed. We did announce earlier this year a project for the European Space Agency in collaboration with Airbus. Actually, we are the lead partner in the consortium. So very, very happy to also be in the position to lead at this scale for this kind of clients with this kind of partners. We are working on a few other things that we'll likely announce to the end of the year.
Thanks. And a couple of more questions on the AI factory now. I'm not sure who would like to answer. Maybe it will be a team effort. First, what is the rollout outlook? You have mentioned the project in Saudi Arabia, but do you have other clients that are interested? What enterprises are you targeting, and which industries are showing the most interest? Maybe also if you're targeting new clients or you're trying to enhance your services with existing clients, or it's a mix. You mentioned in the last slide that you have a subscription model, also a full consulting and the strategy service, which is fixed price. How does this work and look?
Chris, do you want to cover the first part?
Yep. Hi, Georgi. Thank you for the question. So it's important to note that we just launched the AI Factory last month, and we already have the first enterprise client in Saudi. We also have confirmation for an SME client in Dubai. At the same time, we have rolled out to all existing clients and partners because, as you know, in the service industry, it's always easier to do upsell to existing clients than to do a new sale and new logo, right? So this means that the rollout strategy is first current clients, do upsell in both enterprise and reseller partners, and at the same time open new channels for selling this. There are different ways to engage. Out of the box, we do have the agentic RAG solution, the visualization, etc. This is what we are offering on a license base, right? After that, however, if a client needs to do customizations, to do product, etc., then he needs to sign up either for the MVP or for the enterprise AI transformation. This being said, we have requests already from the States, from existing clients and new clients, and UAE. We're also approaching some of the EU-based partners.
Maybe just to clarify, we don't yet have subscription/licensing revenue. So as of today, we use the AI Factory as a way to be more efficient in our existing business model. So we still the business model is still based on services, and it allows us, especially when we do fixed price projects, to potentially have higher margins because the extra efficiency and productivity that we're gaining from using all of the ready components is significant, and we partially share this with the client, so we could offer more competitive pricing, but also we can keep our margins. This is not yet subscription revenue, but it is possible to become one in the future.
So yeah, I was actually going to ask as well for the impact on margins of this new service. Apparently, it's enhancing the margins. So can we expect some acceleration in going into positive EBITDA territory from rollout of more and more clients, current clients in the AI Factory?
This is one of the components that is helping with that. Obviously, we won't be transitioning 100% of our projects over the coming couple of years into this platform. So we also need to continue to improve the margins around the other projects and continue to decrease the indirect costs, which are pretty significant in our organization still as a result of all of the M&A. So there's other things to be done, but this is definitely one of the factors that allows us to increase margins. So far, actually, this has been net negative because it takes some investments both to develop the platform, which again, we did not capitalize these costs on purpose. And number two, also, we're actually doing a lot of proof of concepts, and in some cases, these are free of charge. So when we see a big opportunity, when we're competing with our big guys, sometimes we say, okay, let's invest 1 month based on the platform that we have. A month later, others are delivering proposals. We're delivering live demos with real data, which was actually how we won this project that Chris mentioned in Saudi. The customer was super impressed by the fact that we actually showed them a demo as opposed to just a proposal. And those are investments. So we actually have literally half of our AI team now is working on proof of concepts, and some of those are not being paid. So it does take some initial investment, but as we continue to scale this effort, I see a serious opportunity for improving the margins, at least on that part of the business.
All right, understood. And maybe lastly, what are the challenges, the adoption challenges for the clients currently? Because you're mentioning that you're targeting to move 100% of projects to the factory. So what will be key challenges for that from clients to adopt this new technology?
Well, it's important to know that we're competing now against the big consultancies. So in nearly every project, we are either against Microsoft, Deloitte, PwC, or one of the big guys, right? So now we're really playing in enterprise AI consulting. And what are the biggest challenges? Companies still need to understand that their data and process need to be changed so that they get the full benefit of AI. So it's not just magic, right? You don't just deploy a platform and everything works. No, it needs to be integrated into the system. People need to know how to use it. And we need actually to go step after step to help them understand the technology and how to get the best value of it. Connie, do you want to jump in?
Maybe just a quick comment here. I mean, when we think about the AI factory, we have very few customers that at this point come to us saying we want an AI factory, right? What they generally tend to say is we have this sort of specific business use case that we want solved, and AI might be a good way to approach it, right? So at this point, before we have rolled out any licensing, as Kosta mentioned, what we do is we take a lot of the functionalities that they will probably need that is already prepackaged in the AI factory, and we use it to very rapidly solve their business problem, right? So the question is not really, do they want to adopt the AI factory? The question is this an amazing tool for us to provide very quickly value to our customers? And so far, we have been seeing that, yes. Obviously, as Chris mentioned, we're trying to have a very strong transformation consulting component, saying we don't just go there and being the one-trick pony, saying, okay, we have the AI factory. We would like to have a bit of discovery with the customer so that we understand what is the specific use case, what's the appropriate tooling, how we can deliver. And sometimes the fastest way to deliver, the cheapest way to deliver, the most efficient way to deliver may not necessarily be the AI factory, right? Chris here has a brilliant example. He says, well, you don't always need a hammer to kill a mosquito, right? Sometimes other tooling might be better. So we're really stepping up into this role of trusted AI transformation consultants, and we really propose the best, most optimal solutions for each specific use case, right? This may not be the AI factory in 100% of the cases. We believe it will be the AI factory in a large percentage of the cases, but obviously we can do other stuff as well.
And speaking of the challenges, with the risk of stating the obvious, given that we compete with some of the top companies in the world, also the brand is a challenge. Obviously, a lot of enterprise clients prefer to buy from other brands, which means two things for us. Number one, we do need to continue to partner and extend those partnerships with some of the big guys so that we could do joint projects with them. And number two, we need to continue to build our positioning and brand. One thing, this has actually been a huge effort over the past 4 months now, and an expensive one. We are preparing for a complete kind of repositioning in terms of external market communication. I do expect the rollout of a new brand positioning in November this year.
That were all my questions. Thanks for the answers. It was really helpful. Thank you, guys.
Thank you.
Thank you, Georgi. Okay, since there are no further questions, we will now conclude today's presentation. Thank you all once again for your time and interest in Wiser. Wishing you all the best.
Thank you, and have a great day.
Thank you.
Thank
Bye-bye.
you.
Bye-bye.
Bye.